G'day, Alan Kohler here, and this week on That's Business, Danielle Wood, Chair of the Productivity Commission, the government think tank, charged with working out why Australia's productivity has gone missing and what, if anything, we're going to do about it. Now, as Paul Krugman, the Nobel Prize-winning economist, once said, productivity isn't everything, but in the long run, it's almost everything. Wages, growth, tax, housing, technology, living standards, and whether the country is actually getting better at doing things or just muddling through, or getting worse, in fact. And at the moment, we seem to be doing a fair bit of muddling through, and in some areas, getting worse. Australia's productivity growth has been slowing for decades, from above 2% in the 1990s to half that in the 2000s, and basically flat in the past decade. So I asked Danielle Wood what's gone wrong, whether governments have ignored the reform list for too long, whether the reform list has been correct or not, and whether Australia has been able to avoid the hard decisions thanks to the China boom, immigration, and a fair bit of economic good fortune. We also get into AI, which Danielle Wood thinks could genuinely shift the productivity dial, perhaps dramatically, but not without some serious questions about what happens to jobs and what governments should be doing now, and whether we're ready for this technology moving faster than anyone expects. And then there's housing. Of course there is. There's always housing. So this is a conversation about why Australia feels a bit stuck at the moment, and what would it take to unstick it, and whether anyone in politics is really up for the job. So here's Danielle Wood, Chair of the Productivity Commission. Good day, Danielle Wood. Thanks for joining us on That's Business. It's great to talk to you.
Thanks for having me, Alan.
So let's start with, what is the Productivity Commission for? I mean, is it a kind of government think tank? Is that what it is?
Yeah, look, I often describe it as a government think tank because I think that sort of helps people conceptualise what we do. I mean, another way to think about it is, government has an independent central bank to set monetary policy. They have a treasury which advises them on fiscal policy. We're a growth institution, so having an independent body to advise on things that go to growing the pie and growing the broader economy. Although we do cover broader grounds than just kind of traditional economic policy, we also go to social and environmental policy. So we provide high quality, evidence-backed advice to government. It is up to government whether they pick up that advice and recommendations or not. But the idea is that having us there helps inform better policy and policy in the long-term interests of Australians.
It started life as the Tariff Board in 1921, I think. And does that Tariff Board still live on somewhere deep in the soul of the Productivity Commission, or is that kind of culture been entirely eradicated in the 80s and 90s?
Look, I mean, it evolved through several iterations after the Tariff Board. So it went through being the Industry Assistance Commission, the Industry Commission. And I think, during that switch, which was really a time where there was a lot greater awareness around the costs of industry protection. And we're still obviously quite active in trade policy and industry policy. And those debates are very much live right now. So I think you probably can trace through some of those historical origins to the nature of the work that we do today.
Now, in the 90s, productivity growth was above 2%. I think it was 2.2% per annum for the whole decade. And then in the 2000s, it fell to 1.1 or 1.2%. And then the past decade has been virtually flat, I think 0.2% growth in productivity. Is that how you see it? Is that kind of roughly what's happened over the past 30 years?
Yeah, that's exactly right. So it's sort of been a step down with each decade. And as you say, when you get to the last decade, and obviously it bounces around depending on what years you're using. But if we go 2015 to 2025, labour productivity growth is about 0.4%. So that's about a quarter of its 60-year average. So very, very slow compared to what we've been used to over the recent sweep of history.
So the productivity was actually created in 1998, just in time to watch that big decline in productivity growth, right? So is that because the Productivity Commission didn't recommend the right things, or is it because governments didn't listen to it?
Look, it's because productivity is a much broader concept than just the sum total of government policy settings. And so, I could show you charts on productivity for every developed nation over the same period, and you would see a similar step down in productivity growth. There's a whole lot of structural forces that are play to do with the nature of economy, to do with the role of technology that are outside of government's hands.
Can you sum them up simply for us? What were the things that caused productivity growth to slow so much?
Yeah, so there's obviously a whole ton of economic literature on this. There's not a single answer, but there's a range of different things that have contributed. So one is just the changing nature of economies themselves. So as countries get richer, they tend to produce and consume less stuff and produce and consume more services. And if we look particularly at the kind of very fast-growing aspects of services, it tends to be things like care, very labour intensive by nature and hard to get productivity gains in the traditional sense. Second, we've seen almost an investment strike since the global financial crisis. Big drop in investment as a share of GDP. That means less capital, less technology per worker. Third is technology, and this one's kind of hard to grapple with when it feels like technological change is everywhere, but certainly for the last 20 years, that doesn't mean it won't change in future, but for the last 20 years, technology has been adding less to growth. The frontier has shifted less rapidly. And then we've just seen economies become less dynamic. And by that, I mean fewer new businesses being started, less entrepreneurialism, people switch jobs less often. So all those sort of economic forces that move resources around from areas of low productivity to high productivity look more gummed up. So that's the kind of broad environment that government is operating in. Policy, I talk about as creating that ecosystem within which growth can happen. So policy matters, and of course I believe policy matters, but there's not a simple line between, PC says this, government pulls lever, productivity happens. It's a lot more complex, the environment in which it's occurring.
Well, bearing in mind what you say about policy matters, I mean, there's a lot of nostalgia in Australia about the reforms of the 1980s and 90s under Keating and Hawke. And in the 1980s, Australia had a terms of trade crisis that led Paul Keating at one point to say we risked becoming a banana republic. I was editor of the Financial Review at the time. I remember it very well.
I bet.
And that kind of produced the reforms that led to that burst of productivity growth we were talking about. So do you think it's possible that the commodity boom of the 2000s that was caused by the industrialisation of China, and then again after the GFC, allowed Australia to sit back and ride the terms of trade to economic growth? And then, like just before and after the pandemic, something similar has happened as a result of immigration boosting GDP. So we haven't had to deal with productivity really. Not that you'd want a crisis, but do you think that those things, resources boom, immigration has allowed us to not have to worry about productivity in that?
Look, I mean, I think it's fair to say that probably the appetite for doing hard reforms will wax and wane with the broader economic circumstances. And, I think it is right, if we looked at the sort of reform agenda and appetite over the past 20 years, I think we would argue that it's been smaller or less ambitious than we saw through that period in the 80s and 90s. That said, I think sometimes people are overly critical. The reforms sometimes look a bit different than what they did. You can only float the dollar once. So some of the reforms that governments have to grapple with today just are complex. If you think of kind of reforming, big beasts like the NDIS, those sort of things, they're very tricky to land compared to, say, cutting tariffs or floating the dollar. So, we are in an environment where things are harder, but I think that is right to say that, to some degree, broader circumstances have meant that we haven't had to do the hard yards in the way we might have done in previous decades.
One of your predecessors, Gary Banks, in his final speech in 2012, he had a to-do list, right? And then in June that year, the governor of the Reserve Bank, Glenn Stevens, famously gave a speech and said, "The Productivity Commission has a long list of things to do. My answer to what we can do about productivity is go get the list and do them." So Since then, since 2012, the Productivity Commission's had two big 5-year reviews, 2017 and 2023, containing, if you add them up, about 100 recommendations, I think. So a very long couple of to-do lists. Do you have a record of how many of those things have been implemented?
Look, I haven't gone through and kind of counted them off. What we do have is, we track when policies that we've recommended have been picked up, and I think some of those on the trade front and others have been picked up. Some from our more recent productivity reports that we prepared for the government at the end of last year have been picked up as well. So it certainly would not be the entirety of those long lists, but some of the things that we have advocated for over the decade have helped shape the reform agenda.
Well, more recently, you had a 5 Pillars report, in which you, to go with the Productivity Summit last year, and you went through those 5 pillars of productivity growth, and you had another 47 recommendations. I mean, so what's happened to them?
I mean, so I kind of group them. There's sort of 15 broad areas. Within some of those, you have multiple recommendations. So we have seen some movement on those, Alan. So there was one around speeding up and simplifying federal environmental approvals and the government legislation on that through the Parliament at the end of last year. That's actually really critically important. It goes to our capacity to deliver housing, to deliver clean energy, to deliver critical minerals projects. So we think that's been a really substantive and important reform. We had what I think was a really important recommendation on artificial intelligence and the regulatory environment for it. What we said is, there are a lot of big growth opportunities with AI. Of course, there are risks, but a lot of those are sort of supercharged versions of existing risks. So addressing gaps in existing legislative and regulatory frameworks rather than coming in with a new overarching AI Act, which had the potential to be duplicative and very burdensome. And the government's essentially signalled that that's the approach they're going to take. So, that's another one, I think. And then some of the recommendations from the CARE report on local commissioning, federal state governments working together to solve local problems has featured in the health reform agreement that's just happened. So, I would say I've certainly seen substantial progress in 3 of the 15 broad areas. We only handed the final reports to government at the end of last year.
Yeah, right. So how do you reflect on that summit that took place? I think it was August. I mean, was that worthwhile?
Look, I think it was.
It feels to me like it's just disappeared in the midst of time.
Yeah, look, I think sometimes we just have short attention spans and we move on after things have happened too quickly. I thought the summit was important, Alan, because, to the point that you were making before, I think productivity and reform had kind of come off the boiler a bit in terms of, being front and centre of the political agenda and the kind of momentum that you need to do hard reforms. I mean, really, the Treasurer went on Insiders the day after the election and said, this term's about productivity. And, that can be co-opted by global events and other things perhaps. But I think it's a really important signal of intention. And what I would say is in the lead up to that summit, we had, I thought, some really interesting policy debates. You had all sorts of people putting forward ideas. You had some pretty meaty policy discussions, which is, sort of step one in doing hard reform. You actually have to talk about the problem and start getting people putting things on the agenda. So, things have come out of that. I mentioned the environmental approvals. There's been a pause and now a review of the National Construction Code. That's really important for the housing productivity piece. There's been slashing of nuisance tariffs. So there's a whole lot of sort of specific things that have already happened out of that roundtable, and certainly, I hope to see more to come.
Yeah, I've got more to ask you about AI and housing in a minute, but just first, one of the more interesting things on your to-do list is a cash flow tax accompanied by a cut in the company tax rate to 20%. So can you explain why that's a good idea?
Yeah, so it goes to the point I was making before around the slowdown investment after the GFC. So business investment as a share of GDP even if we strip out mining, which is very volatile, is down more than 3 percentage points. And that's really critical for our overall productivity performance. We think one factor in that is the tax system. It's not the only one, but certainly Australia's headline company tax rate, it's not particularly competitive by global standards. We know that company income taxes, which we're relying on, creates quite a strong disincentive for investment. So the idea of the cash flow tax is that it's a different tax base. It creates much less drag on investment. Basically, you can write off investments in full as they occur. And so the proposal was essentially to shift a bit of the tax base, to reduce the headline company income tax for all corporates, bigger reductions for small and medium ones, and to replace that with a cash flow tax, which creates less disincentive for investment. Our initial proposal was to do that in a way that was revenue neutral. We think there are a lot of calls on the government budget at the moment. And so we were trying to design something that sharpens incentives for investment while not producing a hit on the budget. When it came to the final report, we also showed a number of other potential options for the government, which would come at some budget hit.
Treasury seems to be against it. Have you had a kind of a debate with them about it, thrashed it out in some way?
Look, we certainly had back and forward with Treasury. I wouldn't say they were against it. I mean, the thing with any tax change, Alan, is there's going to be kind of pluses and minuses. We were exploring some of the more technical challenges in implementation. But I think, they're certainly on board for the broad proposition that the current tax arrangements aren't serving us particularly well, that there are things that you can do, perhaps at no or modest budget cost, which would improve the investment environment. So, I think those conversations are ongoing.
Right. And do you think the government will do it?
Unclear to me. That's the great thing about being at the PC. We serve up the recommendations and it's ultimately their call. But, I think if you take the public language of the Treasurer, it's sort of seen it's an area that he's interested in and looking at and thinking more about.
Just on the subject of the budget and what the government might do you think that cutting the discount on the capital gains tax would be a good idea?
Look, it's not something that we've done work on, so I've sort of stayed away from that in my public comments. But I think there is a case for broad tax reform. We focused on the corporate tax piece in our productivity report, but I think there are certainly arguments around reforms to the personal income tax system, and credible arguments around reducing leakages and concessions in order to reduce the rates of personal income tax. I think most economists would, agree, at least in principle, that that's a different form of tax reform that you could pursue.
On the subject of AI, I mean, it's now obviously it's a huge thing. It well seems to be overtaken by AI. I actually read a paper the other day that was prepared by 15 academics at 8 North American universities, in which they asked hundreds of economists and AI experts and all sorts of forecasters what they think will happen. And the outcome was it's going to have such an impact on productivity that it's going to lift GDP growth from sort of 2.5% to 4%, something like that. So do you think that AI is actually so important it might make all previous productivity to-do lists redundant, and now that it becomes the thing that is sort of core to productivity?
So certainly, if we look at the long arc of history, what has driven the kind of big productivity shifts over time are improvements in general purpose technology. From railways, electricity, things that just fundamentally change how you live and work, have the potential to kind of unleash long periods of productivity growth. And, everything I've seen suggests AI could be in that category. When I think about where's the productivity growth going to come from, I think AI, robotics, quantum, that's where the really big opportunities are. We did some work in our productivity reports just to picking up a lot of the kind of existing work that was done to try and quantify what the impacts might be. And anything with AI is very speculative by nature. It's quite hard to forecast the rate at which the technology develops, uptake, all of those things. But conservatively, we think it could add 4% to labour productivity over the decade. If you think we've been running at about 0.4%, effectively that would be a doubling of the rate of productivity growth we've seen over the last 10 years without, really anything else happening. There's, a lot of estimates that are a lot more bullish than that. And particularly if you think that AI might shift the rate of innovation itself, like if it improves the rate with which we discover, clean energy technologies or new processes for manufacturing, etc., then you could have even a level shift again. So there's certainly a lot of productivity upside, Alan.
Yeah, so the way that AI seems to work is that it both enhances the productivity of people who are working. It lifts the productivity of businesses and people, but it also replaces people to some extent. So what's your view about the extent to which AI will replace human jobs?
Yeah, it's a really important question. And again, I think we have to be modest. I think the best work done on this for Australia was by Jobs and Skills Australia, which they replicated exercises which have been done elsewhere, essentially broke every job into a set of tasks and looked at, what share of task feasibly could be done or replaced with AI. They found reasonably small share of jobs, about 4% of jobs, can either be sort of fully or mostly automated. So those are the jobs that you'd expect to be most at risk. Much bigger share of jobs, 30 plus, or which are subject to augmentation. Some of the tasks can be done by AI, but you'd absolutely need a kind of human in the equation. So my reading of that study is, yes, there will be some jobs lost, and absolutely we need to think about how to transition. It's not the mainstream story, but I certainly think we also have to be aware that there could be tail risks of bigger labour market effects than what we're anticipating now, and government would have to certainly respond if we ended up in one of those tails of the distribution.
Yeah, I read that Jobs and Skills report, and it was a little while ago now, and I reckon it's out of date, entirely out of date. The AI is developing so quickly that you'd have to do a report like that every month, I think, just to keep up.
Yeah, indeed. But I mean, I think the fundamental thing that they're picking up on, though, is so many jobs do have a kind of a human element that is valuable and will remain valuable. A lot of work processes and procedures do require that kind of human sight. And then at the customer end, there can be just demand for that human touch as well. I heard a really nice example on a podcast the other day of the mechanical piano, been around for 50 or so years, but still people kept, hiring people in hotel lobbies to play because people like that human element. And I suspect there, a lot of our services jobs, that human element remains something that people will want.
Yeah, but as you say, there is a tail risk. I mean, who knows what it is, but there is a
Yeah.
tail risk of some sort of level of permanent unemployment. I mean, what do you think government should do about that now? Should they just wait to see what happens, or should they prepare in some way?
Look, I think probably right now we should focus on the median scenario, which, as I said, I think is more a story of augmentation. And so that's a story of actually helping people upskill and retrain. We want people to be able to work with the technology. We had some recommendations in our pillars reports around helping small and medium businesses, helping staff upskill, which I think will be an important part of the story. I think they absolutely should keep a watching brief on the tail risk issue. If we were to go there, you're talking, very big and different policy prescriptions than we would typically be using
Like
for
what?
a
You mean
transition.
some sort of? Do you mean a universal basic income or something like that?
I mean, you would have to start thinking about those sorts of things, and also how do you create, meaning and structure in people's lives, and these are very big, hard questions. As I said, I don't think that is the median estimate by any stretch of the imagination, but I think we have to be honest that this technology is developing quickly and there are potential tail risks.
Now, a year ago or so, you produced a report on housing productivity, which found that we get about half as much house per hour worked now as we did 3 decades ago. Can you just remind us why that happened? Just take us through what you found and what you found as to the cause of it.
Yeah, it's kind of wild, isn't it? In most industries, we get better at doing things over time. In fact, in every other sector of the economy, in housing, we have got worse on that measure. I mean, one thing that's important to say is houses have got bigger and better in that time. And so when we make that adjustment to the data, productivity's only down 12% over the 30 years. It's still, as I said, extraordinary to think it's gone backwards. There are a few things at play. It's a very fragmented sector, lots of really small firms. That seems to be feeding into an environment of really low innovation. So if you look at R&D, you look at technology adoption, construction lags, almost every other sector of the economy, and given productivity growth comes over time through innovation, that's put a real dampener on the sector. We've seen a big explosion in regulation and regulatory burden. You know, I mentioned the National Construction Code before. I think it's blown out from 100 to 700 pages or something. I don't have the exact stats in front of me, but increased regulation at every step of the building process. And we can see that in building times having slowed very significantly over the period. There's also ongoing challenges with workforce and attraction and retention of staff and the right trades. And in some ways, we increase barriers to coming in and working in the sector. And, you know, we had some suggestions around how we could improve flexibility and get the workforce in that we need. So there's not a single answer, but certainly those things seem to have contributed to what is a really lackluster performance in a really critical sector.
Do you think it's possible that part of the answer or part of the cause is the continued high level of unionisation of the building of, you know, multi-storey apartments, and in particular the behaviour of the CFMEU? Do you think that's an issue?
It did come up during our consultation with developers. You won't be surprised to learn. It may well be an issue. It is only an issue for the multi-storey piece because single-storey and other sites are not unionised. Interestingly, actually, when we split it out, we actually found bigger productivity deterioration amongst the low-rise builds. So it certainly can't be everything that's going on, given that we see the same picture, in fact, even worse picture when it comes to low-rise construction.
Did you come to a view as to what extent it's a cause of falling housing affordability?
The productivity story.
Yeah.
We didn't translate it into a sort of price impact, but certainly it will have a very real impact in a world where you are less good at adding the supply that you need. Then that shows up in house prices. So, you know, we think the kind of story on housing, you know, is largely a supply story, as I've said. You know, that's partly around planning rules and zoning and what you can build and where. And then it's partly the fact that we've just got less good at building when we can build. So it's certainly contributing to that overall challenge in housing supply.
Now, I looked at the report. The report didn't seem to have a list of recommendations like most of your reports, but the final chapter was titled How to Improve Housing Construction Productivity. Now, the data from the Master Builders Association, I think in the past few weeks, has shown that the productivity in housing construction continued to decline last year during the course of 2025. So were any of your suggestions in that final chapter taken up?
So I should say the reason it didn't have recommendations, Alan, is there's a distinction in our work between the reports that are commissioned by the government, which are our inquiry reports. We do very big formal process submissions, recommendations to government. And then we are able to self-generate our own work, which this was an example of, which doesn't typically have recommendations or the kind of the full shebang sort of approach. So, what we have seen is a pause in updates in the National Construction Code. It came up a lot as an area that was adding costs and complexities. And one of the challenges that people put to us was just the frequency of updates. So, how can I innovate around a new building technique or material when the code is just constantly moving and I feel like the rug's going to be pulled out from underneath me in 1 or 2 years? So I think that's important, as well as obviously the deep dive look into the code. There have been some movement on the barriers to modern methods of construction. There are various barriers to uptake of, say, prefabricated or modular housing, but we said, certainly regulatory barriers shouldn't be standing in the way. And I think state and federal governments are working to ensure that those barriers are removed so that we can see some of these more innovative building techniques and more productive techniques being picked up. So, I think we have seen some movement. I know the minister, really is taking this issue extremely seriously, and I've heard her kind of picking up some of those key themes from the report. So I think it's an issue where there has been movement, and I suspect we will continue to see movement.
I interviewed Paul Schroeder, the CEO of Australian Super, the other day, and he listed productivity, inequality, and housing as the three big issues, and he said housing is the biggest one facing Australia, society, and the economy, and everything. So, do you agree with that? Do you think that's right? That housing is a really big problem?
It's look, I'm a subscriber to what they call the housing theory of everything, which is that housing does sit at the centre of a lot of challenges. So it's a productivity issue. If people can't afford to live close to jobs and opportunities, that creates an overall economic drag. It's an inequality issue, particularly a generational inequality issue. If young people can't afford, again, to live near to jobs and infrastructure, it can create challenges, much broader challenges around fertility, around climate, if we're kind of pushing people to the fringes. So I do think that it is such a critical thing to get right. And I know it's an issue that you're very passionate about as well. It's hard not to be when you're in public policy.
Yeah, as you said, it's a supply issue. I mean, are you feeling optimistic about it? I mean, the government's got a target of 1.2 million houses over 5 years from the middle of 2024. I mean, they're nowhere near meeting that target. I mean, do you think that they can, without an increase in housing productivity, construction productivity? Do you think it's even possible to meet that target and to increase the supply sufficiently?
Look, I think anyone that's looked at that target and the progress that's been made will see that it's not going to be met. I think the government did the right thing in setting a target and putting money on the table for states. I think that was absolutely what was needed. I think what we've seen is the challenge of setting the target in terms of numbers of houses, where there's a whole lot of broader things in the environment that can come and make it hard to deliver. And, obviously that hit at a time of supply chain disruptions and soaring costs of materials and things, all of which made it very hard for the states to have any chance of making the progress that they needed. I would like to see the money that's put on table, and probably more money put on the table, tied to specific actions that the states can take to make it easier to supply housing. I mentioned the regulatory environment before. It is incredibly complicated. There are lots of barriers to supply. States are moving. I think we've seen some big shifts in planning regimes in Victoria and New South Wales and WA, but would like to see more of that. And I think incentivising states to do that work is the way to go.
Do you think, just given what you're saying and the difficulty of improving the situation, do you think it's possible we all have to get used to the current level of housing affordability, the current sort of ratio of house price to income that we've got now, which is obviously more than it was 30 years ago? Do you think that's true, that we have to just get used to that? And what does that mean for Australia?
Look, I don't think there's any quick fix. And even if we, significantly up the supply, which I think we have to, that's going to take more than decades to filter through. We definitely, I don't think, could get used to the kind of growth in prices relative to incomes that we've seen, because it would get to a point, it's already at a point where we're seeing young people leaving Sydney en masse.
Even if it stayed where it is now, it's kind of an issue.
It's uncomfortable.
It's uncomfortable. So what does it mean? Clearly it's going to stay where it is now. I mean, it obviously isn't going to come down in some, at least quickly. So what does that mean for Australian society? How do we deal with that, do you think?
Well, one, we should be working on the problem. So, all the things that I'm talking about are really important to try and boost the supply and make housing more accessible over time. I think we see more of the same challenges, which is, some of the, particularly big cities, not being able to have young people live there close to jobs and opportunities. A world where whether your parents own a house is more predictive of whether you own a house than your own efforts and incomes. I mean, those are not great outcomes. It's not going to change overnight, but it's more incentive, I think, to push even harder to make sure that it changes over the long term.
Just finally, I mean, you relatively recently switched from Grattan Institute to Productivity Commission. What was the biggest surprise to you moving and taking charge of the Productivity Commission? What did you find?
Oh, it's a great question. I mean, so in a way, it's moving from a kind of non-government think tank into a government think tank. I think what's very special about the Commission, we're very rare by international standards. Like, there isn't many countries that have something that looks like the PC, and I have all these international delegations come through and say, wow, this is really cool. Some say they have PC envy. But I think it's having that long history of being able to do these sort of deep policy deep dives for government, pushing into areas that are by definition hard and thorny, but having processes, including extraordinary processes for consultation, engagement, that hopefully means that even if people don't necessarily agree with every single thing in the recommendations, they can see that we have used evidence and we've reached conclusions that would be in the long-term interests of Australians.
I suppose we can thank our long history of tariff protection and industry protection for the creation of it in the long term, can't we?
Yeah, look, I mean, I think a lot of institutions are kind of path dependent, and they do have these sort of quirky histories that led to them being what they are today. So absolutely.
Well, thanks very much for talking to us, Danielle Wood. That was great.
Thank you. It was a very fun conversation. Thanks, Alan.
Thanks so much for joining me on That's Business. You can find That's Business on the ABC Business Daily feed every Friday. And so you don't miss out, make sure you follow ABC Business Daily to find us on ABC Listen or wherever you get your podcasts. And if you're a fan of what we're making, tell a friend about us and where to find us. Carrington Clark and the ABC Business Daily team will be back in the feed on Monday.